Still on the outcome of the Central Bank of Nigeria, which has generated conversations across financial markets and the wider economy. In the capital market, a lower NPR could drive investors towards equities as returns on fixed income instruments such as treasury bills and bonds become less attractive. This may increase liquidity in stock trading, potentially raising share prices and market capitalization. So how far-reaching will this policy shift be? Will it significantly boost investor confidence and drive growth in the stock market? CEO Finance with Mukhtar, Mr. Mukhtar Mohammed, is our guest to help unpack today's discussion. Thank you so much for joining us at this point.
Thank you for having me.
All right, so to what extent is the current monetary policy transmission mechanism effective in Nigeria?
Well, if you go by what we've seen thus far with the economy, then you can say that the monetary policy has been one of the most effective tools that we have seen in the economy. You've seen how the tool has systematically drive down exchange rate, systematically bring down inflation. And those are the key, inflation, interest rate, also price stability. If you look at that, then you definitely say this CBN policy, the monetary policy have really helped in driving, creating stability in the market, in the financial market especially, because before now, you don't know what you expect in terms of hyperinflation, exchange rate volatility, high interest rate. Before the CBN met, most of us were just concerned whether they want to cut the rate now or they will do it in the next one. But we knew that there was no how that rate cut is not imminent. So, but again, for me personally, I think it came as a surprise that they did it earlier. I expected it, but maybe I was expecting it their next monetary policy meeting. Maybe they may have to look at inflation. But again, to the week coming to this MPC meeting, you saw how the Naira was winning over the dollar for a very long time. And I keep saying, and I'll say it, I mean, the key driver of inflation in Nigeria is not just extraction of liquidity in the system, it's also high exchange rate. So when you see those exchange rates start coming down, definitely, I think they are very confident we got to as low as 1,497 Naira for the exchange rate in the official market, which has become one of the most transparent market that we've seen. We must give it to the CBN. I mean, when they came in, it was more or less we saw the exchange rate move to almost 2,000. Yes. People were projecting that it would be 2,500. But today we are sitting comfortably at 1,500 or 1,550. And a lot of people still see a lot of potential for the Naira to gain over the dollar in the long term, especially when you look at our robust reserve that we're having. You look at our oil output, you look at the microeconomy in the non-oil sector. When you put all this together, you are excited with the years ahead, what will definitely happen to the Nigerian economy.
Concerning the dollar to the Naira, the Naira to the dollar winning, many Nigerians generally are impatient, and many are still looking at the past, at the time when the dollar was about 100 and something over the Naira. You say in the long term, many Nigerians are impatient.
Well, you didn't get here hurriedly. I mean, we gradually got ourselves to where we are. So you don't expect us to just go out of it, no matter how much good policy that we have. You see, you need to listen. When you listen to the CBN, you realize that they had a particular trend, a program of event, what they were planning to achieve. When they came in initially, you realize that they were looking at popping up the reserve. That was the first goal. Then secondly, they wanted the Naira to become more competitive. That's what the CBN governor said. We want the Naira to become more competitive, become market-friendly, to attract investors. And you see that when we went for Euro bonds, we went for the fixed income space, everything was very buoyant. Then now they have gotten that, they have beefed up the reserve, they've seen the Naira as being competitive. Now they have moved to bringing the Naira to be stable in terms of price stability in the exchange rate. So that's where they are going to, and that's where they are working at. At that point now, when that it's settled, then you begin to look at, okay, now we have created stability, we'll continue to improve the reserve. As the reserve keeps improving, definitely the exchange rate will keep, the exchange rate between the naira and the dollar will keep on nosediving. And you must also forget that the dollar itself is also having its own crisis in terms of major currency in the world.
True.
That also is going to help us if it continues like that. So in terms of saying, oh, we are not really seeing the impact, we are not really, we don't have that patience to wait. I mean, you just have to wait because, again, economy is like the life of a man. You first of all, when you delay, when a man comes to the world, you cannot talk, you cannot walk, you first of all crawl. So that's the same thing with the economy. Economy is like the life of a man. It's a process. And once you are able to jump one process without categorically achieving what you are supposed to achieve in that process, you end up distorting other process, and you may come back, become worse off than the process that you were before. So you need to take it based on your processes in economy, and then also based on what you are planning, what you are trying to achieve. And like I said, the CBN have been able to achieve virtually what they want to achieve, and moving now towards achieving a longer goal, which is to make the naira more competitive, more stable, more market-friendly, and also the right price.
What do we need to put in place to ensure that the naira is more stable, more competitive, and more market-friendly?
Well, I think, again, the CBN, whatever we are enjoying now is monetary policy. That's the truth. So for us to up the game, the physical side has to come in. And that's why I was excited why the suspension of the 4% FOB, that's fantastic. That's the physical side. Because, again, if you are achieving stability and then price of imported of goods, and you know fully that most of what we consume we import. Even if we don't import, the machineries that we make to make them into finished product, we import them. So if you are beginning to put those charges, that's from the physical side, then it will begin to have a negative effect on whatever policy the CBN is trying to achieve. Secondly, again, we have seen also the physical side comes in and said, okay, we've removed tariff on telecom, also duty fee of telecom. Okay, those are ways that you are trying to help also complement what the monetary policy is doing. So I think by and large now it's life fully on the physical side to do. You don't have, the monetary side is trying to bring down inflation. If the physical side is working towards increasing inflation in the system by like more capital will be released and all that. So definitely the physical side need to work in synergy with the monetary side. And if that happens, then you begin to see the kind of stability that you see. But again, at least now, what I can see from where I'm sitting now is that the physical side has been able to weather the storm. I mean, the monetary side has been able to weather the storm. It's now left for the physical side to begin to enact policies that will create jobs, policy that will have the middle class. Because again, if you look at the Nigerian economy as it stands now, you look at the very rich and you look at the very poor, it means like if the middle class is not. And our economy is a consumer-driven economy, and those that consume more are the middle class. Yeah. So you need to create that middle class. By the time you have those middle class, that means companies, virtually, especially the manufacturing companies, you begin to see consumption, and then you begin to see job creation, and that also will be impact in their bottom line. So there's still a lot of work to be done, but I think lightly on the physical side. How
long do we have to achieve this? Because it looks like, from what you're saying, it's all, sweet and all of that. But with every administration comes a new CBN governor. With a new CBN governor comes new policy and all of that. How long do we have to achieve all of this? Well, that's the challenge we have as a nation. We don't have a common vision. And so it's always difficult trying to achieve it. And like you said in your report, this is the first time, last time we caught rate was 2020. That was about 5 years ago. And so when you look at from 2021 to date, we've had a consistent policy from different management. You remember, we have two management teams of the Central Bank of Nigeria. And that is why you are seeing the result you are seeing now. Because they didn't just divert generally. Yeah, there was a little bit of diversion, especially in the area of defending the naira. Yeah. But in the area of interest rate, MPC meeting, you saw it was consistent with the previous administration. That tells you why we have achieved where we are today. So the challenge with us as a nation is that common vision.
what's the common vision for our economy? So if this administration leave, if another administration will they continue with those visions? So that for me is that for me is the challenge. That's why you cannot categorically say when this process will be exhausted. But again, like I say, in economy, you only tick it. You don't exhaust the process. You just make it better. So you come in there, you are not just going to throw every thing that the previous administration has done, like I'm talking about the CBN now. You are going to tick it in ways, places that you think is not working, and making sure places that you think is working are improved to be better. So
many reforms claim to deepen the capital market, but structurally, we addressing the core constraints, governance, enforcement, political risk, and the weak retail investor base.
Jabelos, if you look at those three areas, let's start from the last one you said. Weak retail investor base. Yes. You remember that at a point we have 95% Nigerians, we're 95% Nigerians trading on the equity market. 95%. Virtually no foreign investors. And out of that 95% of Nigerians that were mostly trading the equity market, over 70% of them are retail investors. So you can see that area has been addressed. If you look at the current recapitalization of banks, you realize that most Nigerians that are participating are retail investors. So definitely that risk side of retail investors has been taken care of because Nigerians now seems to be the owner of their market. True. That is, when you look at the data from the NGS, you realize that Nigerian investors are the ones driving the market, and retail investors are mostly the ones also in the market. And that is responsible for why you have not seen those kind of extended bullish runs that you normally would have seen for 1 month, for 2 months, for 3 months, because when you have the foreign investors, they come in there, they sit down. But for the retail investors, there are a lot of things that catch their attention. Either you want to buy a house, you want to pay school fees, you want to fix your car, so they will have to come to the market. In terms of structure, you have to give it to the NGS and the Security and Exchange Commission. We've been able to have structure in the market. We'll be able to have the NGS have dematerialized into like a public quoted company. So all about corporate governance and everything are all found in there. So most of these challenges that you have just listed, it's more or less like we've gone past it.
Political risk?
Political risks, I mean, when you talk about political risk, you talk about policy somersault. If you look at the current administration policy of the current administration of President Bola Tinubu, you realize that the stock market has been the largest beneficiary of its economic policy. Because I can tell you, at the time he came in, some prices at where they are today, and the kind of investors we have attracted in the market since he came in. So you need to know that the policy have actually favored the stocks market. So political risk is there. But again, when you look at political risk, I've talked about how this current administration economic reforms has favored the market. You talk about political risks, again, you are talking about maybe will we have a military coup? Will we have, I think we've gone past that now. Democratically, I think we are moving step by step. We are not yet there, but at least we are moving step by step. You can definitely be able to say in the next 2 years, 3 years, we'll have an election. So the political risk has minimized. And again, like I said again, we have Nigerians playing the market compared to if you have the foreign investors. They are here and they have challenges in their own economy. They have to pull out funds either to one thing or the other. But I think for now, like I said, if you look at those three areas, definitely I think we are in good standing. Talking about 2027 elections, how vulnerable is the Nigerian capital markets to policy reversals, especially with the elections on the horizon? You see, Nigerian market, you definitely cannot rule the market out of policies of whatever administration I came. I've just told you. The previous 8 years of President Muhammadu Buhari realized the stock market was almost like in a standstill. Because at that time, you don't have the retail investors. I mean, you don't even have the foreign investors. Foreign portfolio investors, foreign direct investors. But at the time he was living, I think, we're almost like 98% non-existent of both portfolio direct foreign investors. So that is how policies can impact the market. And when the current administration came in, their policy have been positive towards the market. You have seen inflow of foreign investors, but maybe not like it were like 10 years ago, but we are seeing tickling in. And that also is coming to the fact again, you have to go back again to the Central Bank of Nigeria, being able to stabilize the exchange rate, so investors have confidence to come to your market, knowing fully well that when we come to your market, we'll be able to exit your market also at a good rate. So that are all planning out, and that is why you are seeing what you see. Yes, policy will tend to affect the market, like I've given you instance, but we hopefully, with the market, the way the market is evolving, now, when the policy comes in, remember, it affects the microeconomy first. And the stock exchange cannot be exempted for the microeconomics. But initially, sometimes you see policy and the companies that are listed in this market, some of this policy favor them at a point. So you see that sector of the market participating very well. Give an example. When the current administration came into power, you realize that the financial sector, with the revaluation of the currency, the floating of the naira, favored the financial sector, did not favor the manufacturing or the telecom sectors. So you saw a downward trend in that sector. But now that there is stability, you are now seeing both the financial sector and the consumer goods sector and the industrial goods sector enjoying some of this policy of the government. So definitely policy have a way. So when it comes to the stock exchange, at a point the stock exchange can have a life of its own. It's more or less like a child that has to feed from what the mother feeds when he's inside his mother's tummy. But when he comes out, he has to do with what the environment gives to him. And so at a point, the stock market can imbue those things, but it comes to a level that the economy itself has to complement the market for you to see the movement.
All right, so the next Monetary Policy Committee meeting is in November. Are you optimistic that there will be further rate cuts?
Like I said, I wasn't expecting a rate cut now, so it has happened. I'm optimistic of a probable rate cut. I think that will also be depending on what we see going forward, most of the data that they will get, maybe from the National Bureau of Statistics, inflationary data, and exchange rate and everything. That will determine. But I don't think we'll continue to have the rate cut now. Next one we have rate cut. Next one we have rate cut. You see, this current central bank seems to take us by surprise. I give an instance. Nobody was talking about the TSA before now. They came in and say TSA 75% has to be domiciliary. So you are saying that they are also using the TSA also to fight inflation. So that because that funds, when they find their way into the market, it tends to make sure there's so much liquidity, and that could fuel inflation. You see, and again, they are looking at the bank capital adequacy ratio. They reduce it from 50 to 45. And that also will try to inject liquidity now. The challenge is, where do this liquidity go? Does it go to the real sector, or does this liquidity now find its way into the fixed income space? That is what the financial market, in terms of